All the brothers, I believe, live and their children live in the same house.
Well, it's been like that for 50 years. Marwari School of Management was the one I went through. Huge journey for India, and where we are today, it's just completely different. Then we are building a green hydrogen project in Jamnagar.
Welcome to PTI's show at 4 Parliament Street. Essar Group is one of India's largest multinational conglomerates. It operates across energy, infrastructure, mines, and retail. It has an asset base of nearly $10 billion and revenues of $15 billion. And at the helm of its decision-making is Prashant Ruia, a second-generation leader of the family business. In fact, he was inducted into Essar at the tender age of 16. And in the last couple of decades, Prashant Ruia has transformed the 50-year-old Essar Group into a future-centric group of companies and is leading the group's transition from carbon-heavy to green assets. Prashant Ruia is with us today to talk about his optimism for India's economy, the transformation of the Indian business environment as a whole, and Essar's own plans to expand in India and in the international market. Prashant Ruia, welcome to PTI. Thank you so much for joining us. I'll start with an obvious question. You come from an industrialist's family, and children of most such families, billionaire families, they take it easy. They don't necessarily jump into the business right away, but you did at the age of 15. What was the motivation? How did that come about? And talk us through the journey of Essar 1.0.
First of all, thank you very much for having me here. We've interacted with the PTI for a very, very long time, but great to come and see what, as I said, the engine behind the whole organization is amazing. As far as my journey is concerned, yes, I did start early, but at that time our group was fairly small. In the sense, Papa and Chacha, they had just got started in '69, but we were still a fairly small group in '85, and I actually started working with Papa in all my holidays, and actually from the age of 12. So not working, but just being with him. Yeah, it wasn't working really. But I think at that time the opportunity was there, and I started college, and I found that I could I could work too, because the college was a morning college and I was at HR college, and then Papa said, look, if you're not doing too much there, then you start. Why don't you come to the office from college? After that, of course, I didn't go to college very much, but because I was working sort of full time. But but it was an easy option. I was pretty much inclined to work, and then when the opportunity came a few years later to go abroad to study, I didn't pick up that option, and I continued working because I had already got, and we were at early stage. Things were just getting going. It was a very exciting time for us, and I was enjoying myself. So Marwari School of Management was the one I went through.
So what kind of work were you doing initially?
No, initially it was basically just being with my father and my uncle, participating in every meeting, just being there, listening, not talking very much, to be honest, and just picking up the ropes and understanding how business is done, and then I went through every department in the company, whether it was the accounts or every section, every department. I went a couple of months in each department. By 17, I was given responsibility to do things. And yeah, we were a small organization, so everybody knew what was happening, and it was the learning was fast.
So your father and uncle were not disappointed when you decided not to go to the US?
No, not at all. They were quite okay. They were quite fine. They were actually dreading that I actually might go. In a sense, they were not very keen at that time. So there was just so much happening between 85 and 90 for Essar. So we were just getting started. We did our first IPO of Essar Shipping, and so, it was a very, very early growth phase. Right. And so yeah, it was a natural choice.
It must be very fulfilling to look back and see that you were part of the growth right from the beginning of the company.
Well, I wouldn't say right from the beginning. Obviously, Papa and Chacha started in 69, and then we did a lot to get to 85 by the time I started. But yeah, I've been there from a long time and fulfilling. We've obviously done a lot over the last 4 decades, and India has changed a lot. So it's also been a huge journey for India, and where we were, and where we are today. I mean, it's just a completely different. Even from a business sense, from a commerce sense, from a market sense, it's a tremendously different journey. It's been a tremendous journey for both, and we've been part of that. It's been good fun.
Yeah, to take the last question forward, I also would like to go on a flashback mode. The Essar Group has seen many ups and downs, a lot of regulatory challenges in getting clearance for the refinery, then the most difficult phase like the Supreme Court cases, selling of assets to repay the debt. So in hindsight, do you think the group could have done something differently to keep some assets safe? I mean, before we go on to the current and future.
Sure. First of all, the flashback is good, but there were tremendous phases of very, very good growth, and asset building, and building really world scale projects, opening up the market for private sector. The real growth for Essar came in the early 90s when many of the sectors which private sector were not allowed to participate because there was a license raj. Those days there was licenses, and you would not get a license for building a power plant or building a refinery or building a steel plant. It just wasn't there. Telecom for that matter. So we really blossomed as a group when things opened up. Private sector was allowed to participate, and we became one of the few groups. Well, not few, but one of the groups which early stage moved into these large global scale projects for the domestic market. So India had never seen a refinery built by private sector. Us and Reliance did it at that time. We hadn't done anything on the steel side. It was all controlled by Tata and SAIL in those days. And all of those plants were on the East Coast. We built India's first West Coast plant. And then power was the same. We built our first power plant came just around the time when Enron, we actually came before Enron came. Not many people know that. But we built our first power plant in 500 megawatt plant in 88, which was about 6 months or 9 months before Enron. Everybody, Enron was a big moment when power came to India for private sector. Telecom, we launched India's first telecom service, with launch of actually in Delhi, with the launch of Essar of our cell phone service, and then of course we merged with Hutchison, and it became a all India thing. So that journey has been tremendous. We've done a lot, and then in that journey we've obviously had some bumps along the way. Probably two periods when we really had we faced difficulty, but when we were growing at that pace, and the country's rules and regulations were also changing. A couple of times we got caught out in the regulation, and so we had to face those difficult periods, but they were short periods in the middle of some really good runs, and so that's really been it. Now the recent downturn, if you will, was about 5-7 years ago. Again, largely driven by regulatory issues which the country faced, and those are not specific to Essar Group. They were affecting the industry, and we were unfortunate to get caught out in that whole regulatory changes which took place in the country. And those changes, I think, have made now those rules have changed, and I think it's a much better environment now compared to what we got into, because the whole rules of the game have now become much more transparent, much more open, and therefore it's probably much easier for the people who are doing it now, so that they don't face these kind of issues, which many of us faced. I don't think, as I said, it wasn't specific to any one particular group.
Is it easier to do business now, you think, in India than?
I think it's more the governance levels are for India are very, very high. And I mean, easier, I would say not, in the sense, I think for a group, for a person to start out today, yes, you can go through the startup culture and all of that, yes. But if you're in the industrial side of business, it's very tough right now, because access to capital for projects, greenfield, brownfield projects, is not that easy. It's not easy at all. We had the opportunity of having, capital markets and institutions and banks really supporting development. We had the concept of DFIs, developmental financial institutions, whose job was to see how we can create industry, help companies, help groups, help promoters who were smaller, very small at that time, to try and build global scale assets. That is not possible today. So to some extent, it's more difficult, which is why. Yeah, but at the same time, if you look at on the tech side or on the consumer side or on that side, there's a tremendous amount of capital available for a good idea. So if you're in a startup mode, today the kind of venture capital available is unbelievable. We never had anything like that in our days. But I think on the industrial side, it's still tough.
So you turned debt-free in 2022, selling off a lot of assets, repaying some 2 lakh crores of debt. Essar has been since then reinventing itself. So which are the sectors that you are concentrating on? Where are you investing right now? And what would be the shape of Essar 2.0?
So we about 5 years ago, I think not 5 years now, 7 years ago, between 15 and 17, we took the call that seeing what was happening in the country, we took the call that we would monetize some of our key assets and we would delever the group, and that's what we did till about 2 years back. So we completely deleveraged the balance sheet. We repaid about $22 billion of debt, and we have a much lighter, much more agile balance sheet today. And then what we did is that we are primarily involved in 4 sectors. We are involved in the energy sector. We're involved in infrastructure, metals and mining, and technology. So those technology and retail, those are the 4 sectors. We've pretty much stayed focused on those sectors for the last, I would say, 20-25 years. Everything we have done is within those sectors. And we wanted to retain that knowledge base and that experience which we got from in those sectors. And then we are sort of making a shift in terms of the technology side of it. We've always been a group which focused on cutting edge technology. So even when we built these plants back in the 90s and the 2000s, we really introduced significant amount of new technology into the country. Whether it was the first power plant, gas-based power plant, whether it was the first gas-based steel plant, whether it was so many technologies which we have brought in. First slurry pipeline which we built in iron ore slurry pipeline in Orissa and Andhra Pradesh. So significant number of things which we have done. We've always been cutting edge in utilizing the latest technology. We are trying to do the same thing again now, where we think there is a huge shift towards green and towards energy transition. And we are trying to incorporate those principles and the technologies which go with it into the investments which we make going forward. So it's the same sectors, but it's a shift towards cleaner technologies. Not 100% all is going to be green, because that's a tough thing to do. It's going to take time for the world to switch from gray to green. But if it's along the path of transition, then that's what we are playing.
I wanted to get a financial overview from you. What is the value of assets under management right now? Where is profitability, across all the businesses, energy, infra? You talked about technology, metals, and also the revenue from portfolio businesses.
Yeah. Well, the group overall today, revenues of the group are about $15 billion. We have a group EBITDA. We're running at a run rate of about $1 billion. So it's about 8,000 odd crores. And the group is currently valued, the assets under management It's currently valued at about $8 billion. So that's sort of where we are as a group today. We currently have about 14 portfolio companies, which is where we are investing in. Some of these companies are in India, some of these companies are international. We operate globally. And we are building out. So it's to give you an idea of what we're doing in the energy space. We're building out energy transition hub in the UK, where we currently supply 16% of fuel to the UK market. We are building one of the world's largest, if not the largest, hydrogen plant there. And we are going to have the world's first decarbonized refinery in the UK. This is the world's first because we will decarbonize. We are decarbonizing 95% of the plant, and there is nothing like that sort of anywhere globally. We are trying to build an IP where the concept of taking an existing industrial asset and then converting it into a greener asset, may not be 100%, but significantly greener asset, is something which we are, is something which we are building that whole ecosystem, and that's something which can be, replicated, in many parts of the world. So it involves industrial carbon capture, it involves blue hydrogen production, it involves a hydrogen-fired power plant. It involves, it's a complete ecosystem of how to convert a plant which is emitting 2.1 million tons of CO2 into the atmosphere. How do we bring that down? And our target is by 2030 to bring that down by 2 million tons. So that means the emissions will be only 0.1 from today, 2.1. Now, we are also helping by building these large hydrogen facility. We are also going to supply hydrogen to all the industry around us, and they can also then decarbonize. So, you have to afford the opportunity. We have an opportunity there because number one, the UK policy, European policy on decarbonization is quite far ahead of where India is. And the biggest difference, in my opinion, is there's a value for CO2. Why today the reason India is not, I think, and sorry, this might be a little bit off the center path. One of the reasons why India is not making so much progress is because the CO2 today, which is getting emitted, does not have a value. It is free to emit. Whereas today, if you were in Europe or if you were in the US, very soon, if you are in Europe, we have to pay close to $60 a ton for every ton of CO2 which we emit into the atmosphere. Now, for 2 million tons, that's $120 million a year. The moment you have to pay that kind of money, and that price of CO2 is going up, it is projected to go from $60 to $150 in the next few years. So there's an economic, everybody has a moral, reason to reduce the CO2. That's obvious. But if you add that along with an economic reason, it becomes far more compelling.
So do we have a moral right as a developing country to question the developed countries and saying that you used to pollute the environment and now it's our turn and you should not be compromising on development?
That's a very difficult question. Look, I will give you a simpler and a better answer. In the past, the cost of going green was significantly more expensive than the cost of utilizing fossil fuel. So commercially, it did not make sense because, why would someone pay 2 times the price or 3 times the price? If the consumer was not going to pay the differential, then for the business to say कि मैं 2 बार खर्चा करूँगा, and that will be, I'll do that for the good, very difficult. Today, the technologies which are now in the last decade, the cost differentials are not that high anymore. You take, for example, renewable power. Simplest example. It's cheaper to make renewable power today than to make coal-based power. It is cheaper, right? Coal-based power, nowhere in the world, nowhere in India you will get it below 4 rupees a unit, 4 to 5 rupees, in that range. Renewable power today is 2 rupees, 2.5 rupees, 2.7 rupees. So not only are you cheaper, but you're also, obviously there's no emission. Because these technologies are now available and getting better every day, it's easier to force or help force the industry to make the transition. Today you're buying an electric car, you're paying the same price. It is not significantly difference. It's not that much. It's today battery prices are coming down. And so you can get electric cars. I think they're going to be launched now, 8 lakhs, 10 lakhs. The prices are coming down. And those cars can drive 300, 400, 500 kilometers, depending on the car. And the cost of fuel to charge those cars is a lot cheaper than, even if you're charging it using power, significantly cheaper than using fossil fuel. So I think that's the transition taking place, and that's actually the opportunity for India, because we can make the transition rather than talk about what we didn't do 50 years ago. You emitted, we did not emit, so now we will emit. Instead of going down that path, why not we go down the path of saying we can do both? We will develop also, and we will, be able to decarbonize. And I think it's a much better story.
Sir, can you share the detail of Essar's total investments in medium term and the companies involved?
So let me just talk about what we are doing in India. So in India, we are building out 3-4 of our businesses here. Obviously, the traditional businesses is the power business, where we are building out a renewable platform and a thermal power platform. Total idea is to grow it to about 10,000 megawatts over the next 4 years or 5 years. So that's one plan, one business we are growing out. We have a traditional ports business where we used to have, as you know, 200 million tons of port capacity. That now, after the sales which we have done, that number has come down significantly. And now we are basically rebuilding the ports portfolio. Again, that's largely in India. There are very few players left in the port sector. So it's and there's a tremendous amount of opportunity to grow and meet the domestic demand for ports and logistics. So we continue to do that. We have a coal bed methane business in West Bengal. We are today India's largest coal bed methane player. We do about 1 million cubic meters of gas, which is very small. India does about I think 75 or 80 million cubic meters, or maybe a little bit more now. And our idea is to grow that. So we are investing close to 2,000-3,000 crores to grow the gas-based portfolio there. We are also, this is a little bit of a long shot, but we are also exploring for shale gas in the block. India has not yet had a commercial success in shale. And we all know the revolution in the US because of shale. So we feel that there are some opportunities there. We are going to, it's exploration, early stage. So please not to get excited yet, but we're doing that. And then we are building a green ammonia, a green hydrogen project in Jamnagar. We are going to invest about 30,000 crores. Idea is to create green molecules and convert them into green molecules which can be transported directly, rather than only green ammonia, because you take green ammonia and then you convert it back to hydrogen. That cost is very high. So we are trying to build a complex which can make green molecules from hydrogen, and largely in the biofuel space, and export that. So those are some of the things we are doing. Of course, the other thing is we are building a green mobility platform. We have built a platform where we are decarbonizing the logistics industry, heavy trucking. So we've set up a company which is making now LNG trucks. We are also investing in introducing very soon electric trucks. These are all 50-ton trucks. These are not small investments. And that is a market which today, frankly, nobody else is doing. Even the traditional companies are not yet, active in LNG. They are going more for the buses and for the smaller vehicles. We are focusing on the large vehicles. And then we are creating a retail network to fill up these LNG stations to fill up these trucks and then offer the trucks as a service in a company called Green Line. Market in India today for trucks is nearly 4 million trucks.
Per year?
No. Total market in India. 4 million trucks are operating in India. That is expected to grow to 8 million trucks in the next few years. And as we all know, maximum CO2 globally in India is not from cars and scooters, it's from trucks. 10 times the amount of CO2 of a car is coming out in a truck, more than 10 times. So if you really want to solve that problem of decarbonizing in the automotive industry, well, the trucks is where the real heavy-duty CO2 is coming out. And that's what we're trying to do.
Sir, what is the range of that truck?
So the LNG trucks have a fantastic range. They have 1300 to 1400 kilometers, which is quite amazing. The electric trucks have a range of about 150 kilometers. So short range is electric, longer range can be LNG. Yeah. So it's a developing industry. A lot of people are building companies for scooters and electric cars and all of this. We are focusing on the heavy industry.
Do you envisage a situation where all the trucks in India would be replaced by LNG?
We are offering today, the trucks are being offered as a service at the same price as diesel. That was the point I come back to. Today you can do decarbonizing at the same price as fossil fuel or cheaper. And therefore, that opportunity is amazing. So today we've got close to 500 trucks already on the road, for example. Just introduced a few months ago, and we are providing a service at the same price as diesel.
Yeah, and just to make that point, LNG is non-polluting.
No, sorry. The CO2 coming out of LNG is about 30 to 35% lower, but the SOx and NOx are zero. Electric is obviously zero. So what we are trying to do is, if you do a combination of the two, you can reduce about 60 to 70% of the CO2 between the two.
That's considerable.
It's
yeah.
considerable, right? So you're today 110 tons of CO2 for a truck, each of those trucks. Yeah. So you have 4 million. It's 450 million tons of CO2. That's a huge amount.
Is Essar the only company into the electric trucks initiative?
As of now, our electric trucks are just getting launched in the next few weeks. I have not seen anybody else. A lot of people are obviously talking about it, but I think we'll be the first.
Sir, Essar was looking to set up a steel plant in Saudi Arabia, and the work was supposed to start in 2024. Sir. Where are we on that? What kind of investments you are proposing to make, and when do we see the plant rolling out the products?
Well, it's we haven't still got all the final approvals. We are very much working on the project. It's a 4 million ton steel plant in Saudi. It's identified for the domestic market, and the idea is to, as you know, Saudi is going through a very, very large growth phase. And so we are trying to, large part of the steel today is getting imported into Saudi. And so this is basically a domestic plant. Plus it affords the opportunity of making it green, because you can we have the opportunity to convert the fuel into hydrogen and make it a green steel plant. Not today, but in a few years' time, when the hydrogen becomes available by 28 to 30. So once we get all the final approvals, the idea is to start. We have the land, we have the port, we have a lot of the things, but not all the pieces are in place yet.
Is there any plan to make a comeback to the domestic steel industry, which the government says is on a growth track?
Now, obviously, it's a very, very interesting space to be. We've done it for 25, 30 years. Once the right opportunity comes, we will absolutely look at it. We are in the process of trying to build a plant in Orissa for iron ore pellets, but it's not a full steel plant. As I said, capital. Greenfield steel plants, new ones haven't really come in India in the last sort of 5 years, 7 years. Most of the expansions taking place are brownfield expansions. If you look around, very few greenfield steel plants have actually come, and that's the opportunity for us. I think India is now less than 150 million tons of steel, and the government, any projection you take, that's going to more than double in the next few years.
You talked about low carbon projects, green ammonia plant and all in India and UK. I believe you had an investment target of around $3.6 billion for all these projects. So what is the status on that, how we are progressing? And is the investment target same or have you revised it further?
In the UK, it's under Essar Energy Transition, is a company under which we are putting all these investments. The investment target of 3.6 billion is absolutely correct. That's what the number is. Our target is to get the first phase of that, which is about 1.2 billion of investment in the hydrogen plant, in the hydrogen-fired power plant, and in decarbonizing the refinery, those investments, to FID, which is the final investment decision, by the fourth quarter of this year, which is in a few months. And then we will immediately start. All the engineering work for those projects is underway, and we will start construction immediately after FID. Those projects are expected to take around 30 to 36 months to complete. So that's 2.5 to 3 years is the time it will take to complete those projects. So the first phase we hope to get going now, and then the second phase, which is another 2 billion, the target for that is next year.
Speaking of rebalancing, I know you have some eggs in the European or the global basket as well. I know that you will go where the opportunity lies, obviously. But when you look at the overall picture, do you sometimes feel it is so much easier to do business outside?
Outside? No. We still believe India is our primary focus. I mean, no question about it. The whole world is coming to India. It will be stupid for us to be going outside. That's not how we're looking at it. We think the kind of opportunity which is available in India for a group like ours, which has the experience and knowledge, which we have gained over the last sort of 30, 40 years, is unique. Very few groups, today have that experience. I mean, literally, groups today which can build, large infrastructure projects you can count them in two hands, right? It's maybe 8, maybe 10, maybe 12, but that's the kind of. So it's a unique opportunity for us to leverage that experience and knowledge to help build and create infrastructure in India. So that remains our focus. And yes, we have international businesses, so we will look at doing both. But India still remains very much our primary focus.
I have a question that can only be answered by a graduate of the Marwari School of Management. Without taking any names, I think we all agree that large family-run businesses often run into family feuds, and there is some differences. There are always some differences. But the Ruia family has, touch wood, been extremely fortunate in that respect. Yeah. All the brothers, I believe, live and their children live in the same house. How did that come about?
Well, it's been like that for 50 years. Yes. So let's start with that, right? So we've always stayed together. My father and uncle, actually, this is a tradition. Well, not tradition, but it was set up by my father, my uncle, and my grandmother. So she basically, made sure that we all stayed together, and it's been like that ever since, right? So, I mean, more and more families are finding it difficult to do. We are now in the third generation. I was in the second generation. Now our children are there, so it's a third generation. Obviously, it gets more and more complicated as the number of you go to the next generation and the next generation. But issue is simple. If the goals are aligned, I think at least what we have picked up is if the goals are aligned, and people are given enough space to express themselves, even within the family. I mean, it's possible. It's possible, and I'm surprised that it's coming. That tradition is coming down so fast. But at least we've maintained it, and it's been a tremendous experience. At least having that support system at home when you get back, when you're traveling, having that whole support system at work, of course, is quite good, and we're very happy in that system.
Tell us more about your grandmother. She seems like a remarkable lady to have built this cohesiveness.
We lost our grandfather pretty early, so in 1969, actually before I was born, and my grandmother was the one who really held the whole family together. She took the responsibility, and then my father sort of started very early when he had to take the whole. He was the eldest, so he took the responsibility of the whole family. He had 8. He was the eldest of 8 children, so it was a large family. And he's sort of between them. Then my uncle, actually, he was in engineering college. He left college and joined Papa to help build the business. We were very small. We used to be in Chennai, in Madras, in those days, and my father really just got started at working in Madras Port Trust. That's where we started. So that's how we got very closely involved with water, ports. Most of our plants, if you think about it, are always on a port, always on water. We got involved with shipping, we got involved with logistics, we got involved with ports. So it was very, very early connection with, being on the coast and working. And Mama, basically, my grandmother, she was the head of the family for many, many years.
So there's always a woman behind success, right?
Hi, Mr. Ruia. I'm just taking forward Vijay sir's question. How is it working at Essar? Now the second generation is at the helm in charge. So what are the differences and similarities between the style of functioning and working of the present generation vis-a-vis the first generation?
That's a tough thing because our second generation being me, myself and my brother Anshuman, we've sort of been involved since, I started in 85, my brother started in 87, 88. So since that time, we've been really part of it. So it's not like there has been a significant change in the style or in the way the group operates. I do believe that some of the philosophy which I alluded to has shifted a little bit, with the second generation being, I wouldn't say even different, but with the experience which we've had, I would say, in the last, 1 decade or 2 decades. And that has made our investment philosophy a little bit more sharper, a little bit more risk averse, a little higher governance standards. So those things have changed. But I don't think the basic DNA of the group, the biggest and most important DNA of Essar is the feeling of family. And that's something which Papa and Chacha have sort of instilled in the whole group. Every member who works with Essar is a member of the family. It's not that he's working for us, he's an employee. That's the usual thing. Our case is that we would like to feel, or we would like to treat everybody with respect and as a member of the family. So those basic DNAs, I don't think has changed. And we hope we can, whether it's the second generation or the next, we can maintain those traditions because they really have helped us and kept us in very good stead, over the years.
If we talk about the Indian industry or Indian business, they're marked by a few features. One is innovativeness, entrepreneurial spirit, and hard work. So these are the 3 basic engines that drive Indian businesses. What would you say are the problems with Indian business that hold us back from becoming, bigger?
If you look at the way Indian business has grown in the last couple of decades, the only thing which was holding us back probably earlier was certain business practices which were probably less conservative and more aggressive, because everybody was wanting to get more growth. The opportunity was so large. People were, extending their balance sheet. I mean, we did the same because we wanted to, get that growth. That has got corrected. And if you think about the governance and the leverage on balance sheets, etc., 10 years ago, one of the continuous feedback was that the governance is lower and the leverage ratios compared to global companies were higher. Both those things have got corrected now. Leverage ratios are in line with global companies, ratings, this, that, and the other, and governance levels are significantly higher. I would say our governance levels are even higher than some of the other countries because the level of regulation which has now come makes it imperative that we have very high governance levels. So you put those two together, I mean, those were the two issues which were facing the industry. And earlier, Indian groups were largely domestic. That's also changed. We are as global today compared to international groups. I don't see really any reason. And frankly, the quality of people, I would say the hard work piece and the quality of people, the quality of engineers, the quality of, we work in Europe, we work in the UK, right? I'm going to get into trouble for saying this, but most of the people who are working there, they are not engineers. They have come up the hard way. They have come up through trades and frankly, the amount of if you look at hard work and dedication, I mean, you can't get what you get in India, international. It's just not there.
And the sense of jugaad.
Jugaad, I think more and more as you go, in a positive way, jugaad as you go more and more has to come down, in my opinion. Because as you become more and more connected globally and with global best practices and all of that, probably jugaad will reduce a bit. But the level of intellectual capability and the hard work and dedication is a massive difference in India, which is the reason why most major companies are setting up their global capability centers in India. I was in a roundtable in Goa with our Prime Minister. All the major oil companies were there, and each one of them is announcing 30 to 40,000 people. Exxon Mobil, Shell, BP, every one of them has announced 30 to 40,000 people global capability center in India. Earlier it was to do the back office. Now it is no longer to do the back office, to manage their plants, to manage their plant maintenance, to do crude trading, to do product trading, to do all the things which normally they would do, internationally. And then they would have transferred their HR and payroll and accounts. All of that would have come to India. It's changed, and that's the huge strength. And now research. The only one thing which I think India is still not big is research, and that's the next frontier.
So the research, should it come from private?
Come to India. Research, I mean, India private research is very small. Public research also, frankly, is small in India. That's the one area which, if you think of how many new patents we are creating, it's very few. But that's the next frontier.
This is a question about philanthropy. And I'm familiar with the US system, not so much in Europe. But in the US, all big companies are very, very big on philanthropy. That we don't see that much in India. Would you like that to change?
Absolutely. And it has to change. And research is a big piece of that philanthropy, because a lot of the research foundations are set up through philanthropic, ventures. But I must say, it has already changed. It's getting better, but we have a long way to go. We have a long way to go in this. But also, if you think about it, wealth creation for private sector has only taken place. Serious wealth creation has taken place in the last decade. It wasn't there before that. What we are seeing in the stock market and what we are seeing as significant in family offices and significant wealth creation has taken place in the last decade. The obvious, that's the first thing you need. Once you have that, then it will be the family offices, and the next will be philanthropy. And many of the big groups are already doing it, obviously in a big way. It will grow. It has to grow.
Prashant Ruia, thank you so much for talking to us and for helping us understand the reality of Indian business. It is clear that you believe that this is going to be India's century.
Yes, absolutely.
Thank you so much.
Thank you very much, and thanks for having me. Exactly. Thank you.